This is Trade of the Week. I'm Ndawling Lechela, and in this week's analysis, our focus is on real estate investment trusts, with a particular focus on Growthpoint, Hyprop, and Redefine properties. Joining us with her survey of these counters is Gama, Senior Technical Analyst at the Money Hub. Moxima, thanks so much for your time today. Always lovely having you in studio with us. As mentioned, we're talking all things property, right? An industry that's been unloved, but the tide has turned. Fundamentally, things are looking up, but you'll be taking us through the technical picture, right?
Yes, the technical picture.
Right. Before we get into the charts, perhaps maybe take us through your analysis on the sector as a whole and whether it is safe to make some money in there now.
I think you were right that it hasn't really been the best to invest in for some time, and I'll show you on the charts. It's just been on a consolidative or an accumulative phase, which now it's getting out of, and this is when I get excited when it gets out of that, because then it gets into the markup phase, and that's when we can see thorough momentum on the upside, because there's a lot of upside potential with these shares. And the reason why I've actually chosen them at this point in time is predominantly because the US, we've been cutting our interest rates, right? And by far, interest rates are still kind of high. So there is room for them to be cut further. But looking at the US, who also cut the interest rates about 2 weeks ago by 25 basis points, not that we'll mimic what's happening there, but it does kind of set the tone ubiquitously on what property shares or REITs are going to, or the sentiment towards that upside. And if we continue cutting our interest rates, I think the momentum will come through. And of course, cutting the interest rates gives these REITs more money in their balance sheets, right? Because they're not having to pay that much interest, and which means they can then offer dividends when needed. So the continuous cutting of interest rates bodes very well for the REITs, which is why I thought this is an opportune time, especially because they're also breaking out of that long consolidation they've been in, that this is the time we should start nibbling into them.
And it's also been interesting to see how a lot of these property players have been rejigging their portfolios to be more defensive. I mean, we know what's been happening with office property, but they've been, selling down some of those office properties, being innovative, with those with that property portfolio in particular. Now let's get into what the charts are saying, starting with Growthpoint, right?
Let's start with Growthpoint. The reason why I chose these particular three ones is because they actually now at the cusp of breaking out of those accumulative or consolidation phase. The rest are still trotting along, but they'll follow their peers, because there's a plethora of these REIT shares, but I just chose the ones that are very actively trading and are showing some upside momentum. So with Growthpoint, as always, Growthpoint was once a darling. Right? And that's just the cycle with the stock market. You become a darling, and then you pull back, and then you start the cumulative stage, and then you rise again. So it pulled back quite substantially, and if you didn't get out at that point in time, you would have been sitting with an entire loss in your portfolio, but you're able to recoup it if it should then follow through with that upside momentum I'm seeing. Also giving us people, retailers an opportunity to get in. So what I'm pointing out at this point in time is the reason why I'm seeing this opportunity is because Growthpoint is officially broken out of its long-term bear trend. And for me, that's the first point of reference. You've broken out, you're changing character or changing sentiment. What are you all about? So it broke out around there, which is around June 2024. So it's been a year out of its bull trend, which is a substantial time to try and formulate some kind of momentum. Right? And a healthy momentum. So it broke out there, and it's been on this bull channel, but really not shooting the lights out. And that's because it is effectively consolidating, which I'll show you at this point, but it's encountering a lot of resistance at 15 Rand 10. I see why it pulled back at this point in time, because it was overbought, its RSI was overbought, but it has been effectively in this entire consolidative phase from 2022 until currently. And once it does breach that 1510 mark, it then ends that consolidative phase and starts the upward momentum.
I can't believe Growthpoint's at 1510.
I know, right?
I checked, but when you said 15 Rand 10, I said, what?
Babe, it fell down to 9 Rand. 10. Look at the platinum shares, how they pull. So you always have to get out at the right time. That's why I say you never invest for the long term. You invest for as long as that uptrend is intact. And it's in that consolidative phase, and we just needed to break through that 1510 mark. If its RSI remains bullish, then the possibility of it breaching that 1510 mark. Let me just say, if RSI remains bullish and Growthpoint holds above 1319, it's important that it holds above there, because if it does that, then it kind of would set the tone for that upward momentum, or it will attract some buying appetite. Effectively, what you want to do is get in once it trades above 1510. That's because it's been encountering resistance there for a long time. And once it does break through that ceiling is when we could then see the momentum starting. If it doesn't breach that 1510 mark, you have to just kind of...
Don't touch it.
Don't touch it.
Okay.
Because then it means it's still consolidating and you might be stuck in a very uneventful pattern, or rather momentum. Another important thing is, because it's in a bull channel, it really needs to breach the upper slope. So, which brings the next level, which is the 1640 mark.
Okay.
So effectively, 1640 gives us all types of bullish confluence. It's broken out of its consolidation. It has now breached a key level, which is dated back basically to 2022. And that could then set, we can see that momentum towards 18, 2155, just that gradual upside where it completes a 100% retracement to 3150. Alternatively,
so it's shed half of its value. Okay.
I'm also trying to think if that is its all-time high, because I do feel like it did trade higher than that. Yes, it did trade. So that's even juicier. It's got so much upside potential, because that's a 5-year consolidation. The longer the share consolidates and breaks out of that, the bigger that momentum,
that rally could go.
Could go, So let's wait for that 1510. But as I said, the key level is 1390. So if it pulls back all the way through 1390, it means don't get in yet. It could then fall down to 1275. The trick is, if it also doesn't hold there and in fact breach the lower slope of its channel, then it means you shouldn't be investing at all in Growthpoint, because then it's in that consolidation and you'll be stuck in that, and you don't want that. I just like shares that are on the run, on the move. Consolidation is you could wait there for years. And I mean, if you got in any time around 2021, you would have been sitting in
that territory.
So by trading above, by getting out of that entire consolidation phase and trading above 1510, we're going to now start what is known as the ascending phase of a bottoming out pattern, or the markup phase of the cycle, of the trading cycle. So you'll always have the descending, which is that red slope. Then it's that huge consolidation. And the consolidation, you don't know how long it takes. But when it does breach key resistance, in this case would be 1510, is when the ascending phase starts. So that 1510 as well as 1510 and 1640 become good entry points for you to get in, yes.
Because you could potentially see more upside.
Upside, exactly. So I'll just take it from 1510, you can start nibbling it, and then increase your position at 1640, at 18 as well. But just movement from 1510 to about 2155 is a 43% gain. So that's not bad. Just as I said, if it trades below 1390, just put it on ice.
Okay, let's move over to Hyprop then. This is a counter you've actually spoke on before.
Yes, okay. Yes. You remember this? Yes. I've been, and then unfortunately I was stuck in the consolidation as well. But now at least, I mean, I've been sitting with Hyprop for a while, but because of the movement in this bull channel that's in, so it's broken out as well. It broke out of the reason why I became excited and got in is because it broke out of its bull trend way before, and that was in April 2021. Okay. So it's also just that consolidation phase, and it's completed. Yes. I mean, this is prior to, it's also 2020. So with Hyprop, it's actually broken out of that consolidation phase, which makes it more enticing than Growthpoint, because it's completed that. It even completed that return move. It broke out, in fact, when it traded above 39.05. So it's seen that upside, but in that consolidative, in this bull channel, and it actually just needs to breach that upper slope. Because once it breaches that upper slope, then it starts a steeper uptrend. And as you can tell with this momentum, it is likely to breach that upper slope. We just saw a bit of a downturn with the RSI, but that's okay. As long as it's trading above 44.95, and starts trading above 48.50, 40, that gives a nice buying opportunity. In fact, the next buying opportunity would be around 52.40. That kind of seals the deal. And that's when we could then see that natural progression as it goes up to about 75.20. Also has a lot of upside. I mean, Hyprop has traded, and it's not its all-time high, at 107.
Okay,
70.
a lot of upside to that.
A lot of upside. You're getting in at around 48.40. I mean, it's a nice little investment.
You get to double it.
You can
potentially double it.
Exactly, exactly. Just stay in for as long as that. I'm excited that it actually completed that consolidation phase. So we're just waiting for that level. Also doing that bottoming up pattern, and is already, once it trades there, we can then see that that ascending phase towards at least 107.70 for now. Gradual. Please don't think I'm saying it's going to happen
now
within the year. Gradual movement towards there. And alternatively is that if it effectively trades below where the consolidation phase ended, which is 39.05, if it trades below that, then unfortunately people who are in will probably have to reduce their positions. But if you're not in, just stay out. It's important that it actually breaches that 48.40 and 52.40 mark.
So 39, don't touch, but around 48 you can get in.
Yes. 40, let's say 49. It's 48.40.
Okay.
In technical terms, we kind of get very finicky with the numbers.
All right.
So around there, yeah. 48.50. Let's round
put it
off.
there.
And then 48.50, and then just increase your position quite aggressively at 52.40. So that is how it's, so 48.50 to about 75.20 gives you a nice 55% gain.
Okay.
But at 39, don't get in or reduce your positions. That's where I would at least be reducing mine.
Okay.
Yeah.
And then lastly, we have Redefine.
Yes.
Let's get into that one.
Okay, look at that consolidation. So broke out of its bear trend, and this broke out in October 2022. On a nice uptrend, which effectively started in 2020, but it's not shooting the lights out.
It isn't, right? And
it's
that's
one of those, come on, just keep
and
going.
it looks very, the graph looks very different from both Hyprop and Growthpoint.
Right.
Here you are seeing, a steady increase.
But once it breaks out of that consolidation phase that you will see at this point, can you see this consolidation? Once it breaks out of there, which is at 5 Rand 25, you can definitely afford that. 5 Rand 25 ends that consolidation phase and starts the markup phase or the ascending phase of the bottoming up pattern. So 5 Rand 25, it's not too far from there. It's encountering a bit of resistance. That's why the RSI has dropped. But once it breaches there, I see the RSI picking up, and that ends that consolidation. Starts that upside, we could see it go to 7 Rand 40, 9 Rand 40. So once it trades there, 7.40, 9.40, 10 Rand 95. This has also got a lot of upside potential.
And also really affordable for that retail investor.
Exactly. And I have friends who, I had a friend who actually decided, she had a property that she sold, and then she decided she actually just wants to buy REITs at this point, because there's not much needed when you buy a REIT. You just buy the share and you just appreciation and dividends. You have to be taking care of a property.
Yeah.
Right?
That's actually such a great alternative.
Nice alternative. Yeah, a little opportunity cost there. So alternatively is that if it trades below 4 Rand 85, put the call on ice, particularly if it trades below 4 Rand 40, don't be getting into it.
Okay.
Because it may fall to 3 Rand 75. If it doesn't hold there, then it's gotten out of its consolidation phase and it's going to pull back. But 5 Rand 25 is our mark, ends that consolidation, and we then get a nice 41% gain towards 7 Rand 40. There's even more, so that's just one of the resistance levels. Okay. Otherwise, below 4 Rand 40, don't get in, because you may lose 15%. Oof. Yeah, that's not cool. So that's how the summary of everything would look like, and when you should get in, and if it trades through the correction underway levels, it means stay out.
All right, let's leave it there then, Moxima. Thanks so much for your time and just taking us through some technical analysis of your favorite counters.
Yes, and then we'll track back when we come back. And
yes, you see, because I remember.
I love those. Yeah, you do.
All right, that was a senior technical analyst at the Money Hub, Moxima Gama. And that's all for this week's segment, but stay tuned for lots more coming up right here on Business Day TV.